Hey, good morning, everybody. Bob Trade Genius. It's the 2nd of February. I don't know if Poxitani Phil's going to see his shadow or not, but if he was in Southern California, he would not. We're getting some beautiful rain here again, and my daughter's first weekend skiing, and she's going to get dumped on in snow. Dad's jealous. But back to stock trading here. I want to show you a few things here. I'm going to walk through a filter of all the major stock sectors, looking to see where the dominoes are going to fall here next in the market. And so looking at the financials here, we have they kind of flatlined since the middle of the month. And now we know why. The Federal Reserve has paused their rate increases, so the free money is going to start getting harder to come by for the banks. And but it's neutral. You can't short this thing yet, but definitely weakness is abounding. If you're in this, I would probably sell. The industrials have pushed through pretty well here, and they're almost captured their December highs, and they're still in a buy mode, but we're definitely getting overbought. GDX, which we've been doing a lot of trading in the miners here. This candle here is concerning me a little bit, and I think we may have this move might have been a little bit too far too fast, and so I sold some credit spreads on GDX for next Friday and the Friday after, and so I think we're gonna have a pause or a pullback in the mining group here, and we've been taking profit on our miners, and we've done extremely well in the month of January. You can check out our track record on our website, and you can see for yourself the trades that we put on. Beautiful month. And then here's SPY. I'm going to show you a couple things. So here's the trend line. People are looking to figure out where they could start shorting this thing, but they've just been getting burned and burned and burned. And if you're a trend follower, you're still long on this thing. But I'm going to show you this over here. Okay, this is an hourly look on TradingView. TradingView offers things that Telecharts does not, and that's primarily linear regression lines. And so I think we have some hidden selling going on here at SPY. And so here's the Thursday push, and then as London closed, we sold into the end of the day, and then we always have this end of the day kind of rally they do, and then on Friday pushed up first thing because the employment report, we sold all the way down until we had that end of the day rally, but it's below the high from Thursday. Now it could be painting a little bit of a head and shoulders pattern here. We'll see. We're having some divergence in momentum on this, and so I'd be really cautious. And so I drew a line here. This is a high from back here, okay, going into the end of last month. And so here's the top, and then it broke this top. Now if it comes back down to here and fails, then we have a failed breakout. But I wouldn't short SPY till we get below this area here, because who knows how far high we can go on this. Now my thing was 27.14 to 27.19. We hit 27.16 as a high, and so I feel pretty comfortable that our fibs have been hit. But if we break through that on a closing basis, then we're looking to double top the whole move from October, which would be just amazing to me. And then, and while I have you too, I'm doing something that I've never done before, and kind of the reward for you guys listening to me. We have I'm only doing it till the 6th of the month. I'm kind of calling it early bird special. Is that if anybody buys any of our non-bundled items, that means you can get the stock ETF room, you can get the crypto binary room, you can get training, and the software that we have for the cryptos. All that is available to you at 60% off the cover price. This is you can't get the prices any cheaper than this, and I'm only doing it till the 6th. If you're a customer, you can renew and extend your renewal. If you're still checking this out, you can go ahead and use promo code special one, but it's just till Tuesday night. And I think how well we've been doing in the markets, I think you'll find it you'll find this a tremendous value. You know, we've just been killing it. You check the checkers out, and so we're pretty proud of what we're doing. We're trying to make it as affordable as possible for people, and so so those who are interested, this is a YouTube special. Okay, now back to my chart commercial over. Is that so that's what I'm looking for, and I'm going to show you another thing here too. If we go down to the I'm going to break down to the hourly here. If you like to trade credit spreads, these are great opportunities, especially because SPY trades Monday, Wednesday, Friday on options expiration. And you know, when you get these pops in money flow, you know, if you look here, you know, if you wrote a credit spread, call credit spread, that would have paid. Okay, call credit spread here, right here, I'm sorry, that would have paid. Call credit spread here would have paid. And if you would have written one going into the close on Friday for Monday, you know, statistically it would pay you. And this is a nice way for you to pick up, you know, $50, $100, $150, some really low risk. You can risking $500 on the spread, and so these are nice ways to make some money. And so that's what I do a lot of times. I didn't do it this time because I was focusing on the miners, but even when the market's moving higher, you'll have these consolidations because, you know, too far too fast. You know, here's another one that would have paid you as well. So you would have had 5 good trades just grinding out income by just looking for these money flows starting to come off of the highs. Okay, and I call these out in the room sometimes, so if you're ever interested, you have to be in the chat room for those, and that way I can explain it in more detail than a text message. Okay, let's move on. Emerging markets. Go back to daily here. They've been moving up because the dollar's been starting to weaken. You know, this is showing you just the buying interest in emerging markets, which is so ironic to me. It is a relative play on the dollar because most emerging markets right now suck. So this is simply a reaction to the dollar not being quite so strong. I just put it out there. I don't trade it. I'm just more interested in what's happening with it. And we have next is IWM. It's still showing good strength as small caps, and there's nothing here that says sell it yet, and it's just been holding on really well. Here's gold. Gold looks like silver. The miners, I mean, got this little bit of a kind of like a little hammer at the top, very tight range. And I think gold's going to start pulling back. And this move was huge going into the Fed meeting. I think they front ran it, and I think it's going to come back down. This line here that you see here is this is basically a linear regression or Bollinger Bands for the looking back 65 trading days. So we pushed outside of it. That's the reason why it's giving me some pause. Energy still, they're still grinding it higher, and you know, from a seasonality standpoint, this is a move higher for energy, and this is explorers as well. So you know, obviously the meat of the move has been missed. Everything's starting to top out here, so I wouldn't be buying anything new. We're definitely getting overbought. Technology, I think this is where we're going to have the weakness. And so just keeping an eye on tech. And you'll see it more in the Qs when I get to that chart. But again, can't short it, don't buy it. Healthcare, same thing. Can't short it, don't buy it, overbought. Consumer staples, which is interesting here. This is only one of the few that's underneath its moving average, what I call the bull bear line, and hit his head on it and couldn't get through it. So you think in times of stress, the staples would be doing well, which interesting is because branding is becoming off-brand now. So I'm wondering if they're going to start losing some of their ability to hold price. You saw Amazon's earnings on Friday. German retail's down, China's down. You know, people are just pulling back in general. We got the Qs, and this was interesting here that there's some good weakness on a day of really good employment report. Now we know it lags, but the jobless claims are also good too. So, you know, my view all along has been, you know, Trump taking the growth out of China and bringing it into the U.S. A lot of people thought he couldn't do it, that China would have us by the neck, and China's imploding and we're just trucking along as an economy. And that's not going to change. And, you know, it's just simple math. And so, you know, you can see the industrials are stronger, you know, but you see the rest of the world starting to weaken. And, you know, here too, you know, Amazon's big into trust, social media. All those guys are all advertising dependent. So we're getting the consumer to retrench at the same time he's being employed. So it's kind of healthy in a way. You know, if debt can be paid down and people can get their lives in order, and inflation from a spending standpoint does not get to be too onerous, it's going to be good long term for us. But we shall see. And then we have the utilities. I stay with utilities too much. I just mostly look at them because they're a proxy for interest rates, and they're breaking out. So that's telling me that people are expecting lower interest rates, moving for safe haven, looking for more stable income, unless you're a Pacific Gas and Electric customer or investor. And silver here, this yesterday, when it these green bars are, we call these dark shadows, that usually foretells weakness. One of my best trades was when we had one of these dark shadows in biotech a number of years back, and it just dropped 40% from there. So with silver giving this signal here too, I'm expecting it to pull back. Now the good news this time is that I think it's going to, I think these dips are going to be shallow, because everybody and their brother knows the central banks around the world are all in. Now they're, you know, the rich are protecting themselves, and so they're just going to keep throwing money at this problem. And this is one of the ways common folk like us can hedge their idiotic moves. And so I'm looking for a pullback, and we'll jump back in. But I trade it mostly on the minor side. I'm going to do the minor update later this weekend. And then here's the silver miners ETF. And you can see this pull back a little bit too once it loads here. Here we go. And so it pulled back a little bit too. I'm expecting a bigger pullback. Usually when these momentum rolls start rolling over, you're going to see, you'll see a pullback here. You know, I would not want it to come all the way back down to the 65 moving average, but, you know, halfway would be okay with me, and then be looking for getting into the miners again going into April. Discretionary is weakening too. I think a lot of this was Amazon. And let's see if we're done here. A couple more. So platinum was this thing was just rocketing for weeks and weeks and weeks. There was a shortage in London, and they were getting squeezed. And then they miraculously relieved sanctions on a Russian oligarch that happens to be a platinum and palladium mining interest. These guys, I tell you, the rich protect themselves. And so the morality steps aside when money's involved. And so now that's going to be released. There's going to be some platinum and palladium rolling into the markets. They're going to kill the squeeze, and you'll see prices here abate. Plus, you're looking at the auto markets are starting to weaken again. They're the biggest consumers of this stuff. Here's the material sector, and you know, with China slowing down, even though they're spending money like crazy, I think this move is probably over. You have a divergence here. You see money flow, and what money flow is that are people hitting the bid or are they hitting the ask? You know, just like a think of it like an open house. You know, you have an open house, you're selling your home. You know, if 50 people come to your open house, you're probably like, shoot, maybe I underpriced my home. You know, if you have an open house and nobody shows up, maybe I overpriced my home. That works the same way here. Are people coming in to try to get shares, or people offering shares? And you can see here, as price has been going up, it's been more and more on the offer. And so I'm expecting this pie to break back down here pretty soon. And then tech is a place where people hide out. Tech looks like it might break out. Biotech. So biotech looks like it might break out. And so I think if I had maybe a 10% move higher, there's something interesting to watch. I really only play these with the large caps and with the ETF because I'm not really good at picking the biotech small caps because it's all really regulatory related. But you know, there's smarter minds than me. Then that's why you have these ETFs in the first place. But this might be a place to put some money in, especially if we get weakness other places and it's not a wholesale sell-off. So biotech looks interesting to me here still. TLT, I think this is a cup and handle forming. Interest rates are going lower. And let me show you TNX here while I'm here. I'll finish this first. I'll go TNX last. Okay, here's their inverses. I just put them up here to look for opportunities. Is that this is getting interesting if you're the Qs. Bottom of its channel, and this is the money flow. It's been holding up, and so the Stokes have reset. So what I would probably do here is if you're bold and beautiful, you could take a little position here, and then when the Stokes break out, that's what's indicated here. My visual guy. So once I see this thing pop, I know the Stokes have reset and are starting to build momentum again. You can buy some more. But I think this is a good bet. The only thing I don't like is it's an ultra. So you can, if you want to just go short Qs, you can do that, or just buy some puts. That would work too. RWM, this is the short Russell. And, you know, the short Russell still has ways to go here. There's nothing here that says to short the Russell yet. And this is the inverse of SPY, and same diff. You know, I'm waiting for that reversal in SPY, and I won't. If you like to play it this way, this is a nice, safe way to play shorting SPY, where you can just buy some puts and you know, get some more leverage out of it. I'm gonna probably go the SPY put route, and but this is nice for people that have managed portfolios. Instead, you could take some of your long equity exposure out, and you can replace it with some SH. And then we're back. So I'm going to go show you the 10-year here. Here we go. So it popped a little bit on the employment report on Friday, but this is definitely trending downward. And you know, my view is that we're gonna go back and test these lows on the 10-week. I mean, on the 10-year. So, and when China implodes, which they will, so we're gonna go ahead and look at these areas here. I don't know if we'll go back down to 1.8 anytime soon. I'd be happy if we did, but this is not. If you look at this chart, didn't know what you're looking at, this is not a bullish chart at all. And so this is a weekly, and I'm expecting this thing to come down to right here. And so get ready to refinance your homes. I know I will. So I have a VA, so I have a mulligan refi anytime I want it, which means I don't have to requalify, and mostly because it's such a pain in the rear end to just pull all the paperwork together. I can literally just go in and say I'm ready to do it. And then you pay your fee, and they check your credit, and if it's all good, you can refi it. So one of the benefits of being in the military. And so so I'm looking for the city to come down. This is kind of what I'm waiting for. I want to take best shot here at it, and I think this will be very healthy for a lot of people because people can't carry the debt anymore. It's getting to be too much, and people always talk about, oh, it's only 0.5% or 1% up. That's not how it works. It's that everything works off of cash flow, and so people can't carry the note. And cash flow wise, by raising interest rates, they're going to have to lower them, or they're just going to have to start getting more and more charge-offs, which the banks can't afford either. So they'll force the Fed down. So anyway, sorry for the long ramble, but I hope this was helpful. And come trade with us. We're doing a lot of really, really fun things. We just upgraded our chat room, which has been fantastic. And we're going to be adding our mobile apps. Android's done, and then we're coming out with one for iOS. And then, we're unlike a lot of people out there. We're really engaged in this stuff. We love this stuff, and we really want to help people. So come trade with us and check out what we're doing. Have a great day. Bye-bye.